Great, well let's get started. So welcome to the panel. What I'm going to do is just a quick introduction of who we have here, and then we will put some questions to them. If you want to put a question to anybody, we've got the home team here and the away team on my left. Just put your hand up. If you could say your name and which organisation you're representing, that would be great, so we know where the question's coming from. So, as Jim said, my name is David Metcalf. I'm the CEO of Vedantix. We're an independent analyst firm focused on energy, environment and sustainability issues. So we've already met Michael. Welcome back. You didn't have a very long break there. And then just moving down the panel, so we have Craig McKenzie, Head of Sustainability at Scottish Widows Asset Management. We also have Kulveer Ranger, thank you for joining us, the Director of Environment for the GLA. And we have Nick Robbins, the Head of the Climate Change Centre of Excellence at HSBC. So why don't we start with the away team on my left, and if you could, Kulveer, just give us kind of 2 to 3 minutes on your perspective on the energy efficiency opportunity.
Thank you very much, David. I think you've heard quite a bit this morning about potentially what private sector companies can gain from energy efficiency. Boris has been looking at this for the last couple of years. I have to say I've been looking at it for the last couple of weeks. I took over the role of Director for the Environment about 5 or 6 weeks ago, having spent 3 years being the Mayor's Transport Advisor. So although carbon was an issue for me, my main priority was how do we get people around this city? Fundamentally, it appears when you look at, and I've been looking extensively at the environmental programs we have, the question that keeps arising for those people is, how do we save carbon? But when I look at it, I actually look at saying, how do we save money? Because really, if it's a commercial proposition, or whether actually it's an attractive proposition to a member of the public, the first thing that really comes into their mind is, how's it going to hit me in my pocket? Because when we talk about CO2, it's really quite intangible. It's hard to picture it. It's hard to say, what does a ton of CO2 look like? What does it mean to an individual? It means a lot on the bottom line, and it means a lot when we know that if a program that we've been running, trialing last year, and actually we fitted into 9,000 homes called Renew, managed to save on the average householder £154 a year on their energy bills. Now that's a fantastic proposition, especially as we all know in the modern era, what's happening to energy prices, oil. I was meant to name and shame a certain energy provider right now, but I won't. But
why not?
Because I want to have constructive discussion and dialogue with them. But the issue here is really about saving. And Boris and I have been discussing this over the last few weeks, and in fact, you may have heard he did a speech at another conference last week, where he has put a call out to say, what we need to do is retrofit London. The entire city, we need to retrofit it. Why? Yes, because it saves CO2, the major greenhouse gas. But because it saves a ton of money. Not only for the individual, as I demonstrated with the Renew program, we can have efficiency in homes. And these are simple things. This program has actually been trialled and tested over the last year. And we're talking about changing shower heads, energy efficiency light bulbs, better insulation. It's not about complete reconstruction. But when you magnify that and you start talking about, say, public sector buildings, we know in a trial program we've done on our own GLA buildings, which include fire stations and TfL buildings, we've managed to retrofit 42 of those with an initial investment of £7 million, which is providing actual cost savings of £1 million a year. Now, for those of you who aren't mathematicians, that means within 7 years, you get a payback on your investment. And that's what we're looking at. So when we talk about retrofitting, yes, it's homes, yes, it's our own buildings, but it really is all the buildings in the city, because I don't know if people are aware, but 70% of the buildings we see around us now will still be here in 2050. So despite the standards that we're putting into current construction builds and the efficiency we have in new buildings, the majority of this city will still be here and still be probably not efficient if we don't do something about it. And another thing that sort of, struck me straight between the eyes was that 80% of our CO2 in the city comes from buildings. So there's a huge opportunity. There's definitely a need. There's a cost that can be, there's a return on investment here that is good for the public sector and the private sector. And if we're really talking about the private sector, I know that a certain fantastic building in Canary Wharf, built in the early 90s, if that was retrofitted, it could have a 22% energy efficiency saving, which would mean it could save £220,000 a year on its energy bills at a cost of investment initially of about £1 million. So a payback of within 4 years. This makes real business sense. What we in the GLA and the Mayor have to do now is really convince probably a lot of people here and a lot of people out there that there is a real commercial business model here. That means you can actually invest and see a return on this, plus let alone create further jobs and employment. So it's that horrible phrase, I'm going to say it, it's a win-win-win.
Okay, let's finish there. Great, thanks very much. I mean, I think you've raised some of the big questions here. I mean, maybe going to what Michael was saying earlier about scaling up some of these opportunities. And then, if you look at, is it really worthwhile saving £220,000 a year on a bill, when that's probably half the salary of one of the traders? So, do firms out in Canary Wharf really care? Let's move on to hear the perspective from HSBC.
Thanks very much. Just to let you know where I sit in HSBC, I sit in the Investment Research Department and run a joint venture with our group Sustainability looking at long-term trends around climate change. And I think this focus on energy efficiency is very, very welcome because as I think Michael has suggested, really I think the clean energy story for the last 10 years has been about the supply side, shifting the supply options that we have. In terms of the work that we've done looking out to 2020, we see the fastest growth coming on the demand side in energy efficiency, both within the buildings but also transport and industry, and a potential market of about $1 trillion a year, which we suggest is potentially a gross underestimate of the potential that lies on the demand side. Looking further out, we've worked with our global economists looking out to 2050. We are clearly on a highly unsustainable path, both economically and environmentally in terms of energy systems. If we were on a business as usual basis, we'd need to grow to 190 million barrels of oil a day, which is clearly not feasible. Where's the biggest opportunity? It's again energy efficiency. 38% of the abatement that we need by 2050 comes in energy efficiency. That's double the renewable side, which again we see growing sevenfold. So energy efficiency, I think the big story is the next decade, this is going to be a bigger market than on the supply side in terms of the supply options. I think we can talk maybe on the panel about why this obvious opportunity has not been seized. I think there are many myths that we've allowed ourselves to be to infect our thinking, and one of them is perhaps a very, as you could call it, an economistic focus purely on carbon. And as we've seen in the last week, we've seen this bizarre battle between people advocating carbon prices as a strategy for climate change, actually saying that that's a reason why we can't actually do more on energy efficiency at the European Union level. So I think there's quite a lot of rethinking of our strategy for delivering low carbon growth, putting energy efficiency at the starting point, and then rethinking where the other tools like carbon pricing fit within that. For many reasons, I think, for many reasons, we've actually been putting energy efficiency at the bottom of the pack, really, rather than as a starting point, and then thinking about supply options thereafter. But the big message is this is going to be the biggest market for the next 10 years.
Great. Well, so we can mull that one over. Let me move to Craig now, since we can get the asset management perspective, and then Michael, I'll have a question for you afterwards.
Thank you. I work for Scottish Widows Investment Partnership. We have about £150 billion of assets. If you're a listed company in the room, that means we own about 2% of you on average, and we will meet your finance director or your CEO pretty much every year. And it'd be interesting to know what you think I should be asking them about energy efficiency at that meeting. We have come to see energy efficiency as quite a big investment issue. The kind of numbers that Nick has suggested, this sort of 1 trillion a year, is matched by forecasts you get from the International Energy Agency on energy efficiency. This is going to be a massive growth area and bigger than renewables. So we're beginning to ask the question, well, how do we access this investment opportunity? And clearly one way to go is the kind of energy efficiency technology companies, the kind of Siemens and the pure play energy efficiency companies. FTSE now has an index series he's got one index series that tracks renewable energy technology companies and another one that tracks energy efficiency technology companies. If you look over the last 3 years, the energy efficiency index has lost a third of its value. Over the last 3 years, the energy efficiency index has gained a third of its value, and in fact, from the bottom of the recession, it's doubled in value. So energy efficiency technology is very much on the up as an investment opportunity, and we're looking at ways to give our customers access to these kind of opportunities through specialist energy efficiency funds, etc. But I think we've realised also that the biggest opportunity for us is actually not in these specialist funds, but in our mainstream portfolios. We were in the unfortunate position a couple of years ago of owning about 3.5% of BP. We lost close to £1 billion because of the Deepwater Horizon spill. We've been doing some kind of calculations of the energy efficiency opportunity, and we think it's probably of the ballpark of a Deepwater Horizon spill each year in our portfolios. So the waste of shareholder value by companies in our portfolios failing to grapple with this issue is of real scale. With Deepwater Horizon, as you might expect, we had quite a few fairly tetchy conversations with the board about their management of safety and with the chairman, and have had numerous meetings over the last few years. Well, if energy efficiency is of the same order of magnitude, perhaps we should be doing the same with boards, with companies about energy efficiency. And that's where we want to go as an organisation. We've defined this as our kind of, next to directors' pay, it's our number 2 issue for engaging with companies. And the challenge is to work out what we should be asking. And that's what I'm really looking forward to today. I'm going to be around all day, but I'm really looking forward to hearing your views. We're part of the Carbon Disclosure Project, and we signed up to the Carbon Action Programme, which some of you may have noticed they launched earlier this year. We're really keen to work out how we can use that mechanism, which has been very powerful in driving disclosure, to drive energy efficiency action. And I'd be very interested in your ideas.
Great, thanks very much. So if people want to start formulating whatever questions you may have now, I will take those after I kick things off. But you'll be first with your questions. So, Michael, I think one of the interesting themes that has been raised here is, I mean, you were talking about the dramatic scale up in investment in clean energy over the last 10 years or so. And now we've had 2 people on this panel say, well, actually, energy efficiency investment is going to be bigger than that. But isn't the problem with it is that with clean energy, you're investing in these very large assets, and you know, the investment cases there, the project finance, the structuring. Energy efficiency seems to be something which is grouping together many, many small things. And that seems to me to make it a much tougher thing to invest in.
I think that's right. Many of our clients want to invest in energy efficiency, but it's hard to find the opportunities. So as you say, there's a few specialist companies that you can invest in, but actually, it's out there, it's everywhere. That 1% a year that you could increase to 5% a year with the applications of really, in some cases, quite modest amounts of money is very distributed. So, but I think there's 2 questions. That's as an investor, yes, you're going to have to work quite hard, and there are some approaches that people have been trying for some time, energy service companies, energy efficiency contracting and so on, trying to essentially bring structured finance ideas into the energy space. And I think that I'm sure, Kelvin, that will dominate a large part of your activities in the next 3 years. We'll be trying to work out how do you mobilize capital to do the absolutely blindingly obvious, and so on. But I think, that's the answer for the investors. But many of the people in the room, you are investors in the sense that you are managers within corporations. So you don't need to go through you don't need to find a separable opportunity. It's within your businesses. And actually, I just want to finish my mind. I'm going to give you one of the questions that you should be asking to the CEOs and to the boards of the companies you visit. And that is, what discount rate do you use? What payback period do you use for energy efficiency? Because I'll bet that most companies will use a higher hurdle for an energy efficiency investment than for their core business. So if you're running, you're developing retail shopping centres, whatever, and you're probably using, if somebody said to you, everything you do, every shopping centre you build, you have to have a 3-year payback. You'd say, well, that's mad, then I'll never build them. You can't build Blue Water and expect it to pay back in 3 years. But if I say, well, you want to rip out a boiler or you want to insulate something, then what do you use? And you say, oh yeah, 3 years, we need a 3-year payback. That is completely insane. These are the lowest risk investments in your business. The cost of capital you should be using for an energy efficiency investment should be 5-6%. You should be quite content with a 15-20-year payback. It's no risk. And so there's something, that's something that I would definitely, I think that it is being mispriced within companies, right around the world, except for in the very heavy sort of energy intensive sectors where they kind of understand it better. If you're a steel company, you're probably doing it right. But if you're in real estate, you're in travel, you're in all sorts of other industries, I'll guarantee you that you've got the wrong cost of capital for energy efficiency.
That's a great point. Thanks very much. So I think the first question was over here. Name and organisation, please. Thanks.
Hi, good morning. Thomas Freeman from Ernst & Young. I think my question's leading on to the one that you've just asked, David. Sorry. And it's around some of the lessons learned from the US, where the ESCO model has been very well developed. You've got very large companies, energy services companies, that are publicly traded, and they're a fantastic investment opportunity. So my question for the panel, and perhaps for Robin from Siemens, is what some of the lessons learned have been from your work around getting energy performance contracting or getting energy performance guarantees more into the mainstream, because that's at the fundamental root of getting capital deployed and getting this sort of no-brainer investment decision off the ground.
That's a great question. So, I mean, in terms of people on the panel, I think the interesting point is, the EPC approach is much more mature in the US than it is in Europe. And maybe it's more about the kind of creative thinking about financing mechanisms fundamentally to get energy efficiency running. So, do you have a perspective from the GLA?
Yes, well, a couple of the programs that we've been running over the last few years have been specifically to prove the model, to prove that we could provide a certain amount of financing, and in terms of what it would actually achieve and the return, and provide that confidence to the market. Because we're actually now setting up a green fund as well. It's a £100 million revolving fund with some investment from Europe as well, with a view to trying to spend that money and invest it in energy efficiency programs. And we can do that now by saying we've set up programs, Renew, Refit, Better Building Partnership, and give tangible examples, because a lot of it is also about the confidence in the market. But at this point, we feel we need to do that, so that's what we're trying to do.
Okay, excellent. Thanks. Another question?
Sorry,
Yes. Nick.
Let's come back on that. I mean, last week, as some of you know, the European Commission launched its proposal for an energy efficiency directive. And it was probably much weaker than many of us have hoped, but I think it did highlight the need to give some rigour to this market and learn from the US example. And there was some loose language, but one of the goals within that was to see whether you could actually increase the rate of renovation in the European public sector building stock. Now, obviously, the European public sector is not in a very good financial position. So you can say, well, that's an excuse for doing nothing. Well, actually, no, that's an excuse for really going through on energy performance contracting to actually help on the financial position of the public sector. So if we can actually put these two things together, energy efficiency and helping with the fiscal position of the European public system, that would be good.
Great, thank you. Another question? So we have, come on, there's a bit of controversy going on. Great, thank you.
Miles McCarthy, Carbon Trust Implementation Services. I'm going back to the question about what you should ask the companies you're talking to. I think it's picked up with the Siemens example. I think it was £30 billion of green technology sales in 5 years, 3 years.
Last year was 28 billion last year.
So, 50% of the activity that Siemens are doing is in that green field. And I think that's the question you would ask any CEO, what is the opportunity that you're missing, and what is a risk to your business going forwards of not actually looking at how your business can take benefits from this clear direction that the whole economy is going in, rather than looking backwards almost at the cost base and saying, actually, how can we trim a proportion off our own base? Look at where the opportunities are for the business as a whole. And it's not just, I don't think, for high technology businesses, it's for the wider economy, looking for how their business needs to adapt and also can take advantage of the changes that are happening.
Great, yeah.
Yes. Well, shall I disagree with it?
Yes, go ahead, Craig.
Well, the thing is, the kind of message I'm getting in the kind of literature on kind of energy efficiency and why it doesn't happen is that companies are actually quite good at looking at their strategic opportunities and growing their businesses. But they're really bad at looking at systematic energy efficiency implementation. So, yeah, I could certainly go and talk to companies about their opportunities and their strategic opportunities, but generally speaking, I find that they've got good answers if they're in the right kind of business. I mean, obviously, if you're talking to, I don't know, a holiday travel company, they're not going to come up with a £20 billion Siemens energy opportunity. But the opportunity I think that exists for investors is that given the barriers to energy efficiency are largely kind of behavioural and about giving priority at the board level to a systematic programme of energy efficiencies, I think I need to be asking questions about whether they're doing that, whether there is a board champion for this issue, whether they have a systematic programme, and if they don't, and what the hurdle rate is for their programme, whether they have a spend to save energy efficiency CapEx budget, for example. So those are the kind of things I feel I should be pushing, because that's where investors might have some real leverage by getting it onto the board agenda in a way that it isn't for many companies at the moment.
Can I just build that? I mean, I think one of the big things, and I'm sure the Carbon Trust has seen this over the years, is that the biggest problem is just the very poor quality of energy data available, within corporates. It's we've been looking at this for a long period of time in the research we've done, and it's quite incredible, I think, what the CRC has actually exposed in terms of, bills going to empty buildings. So without the data, the people on the investment committee clearly don't have the grounds to take things forward. I mean, I think another part of it, maybe on the investment side, Michael, is you're talking about, is there a specific opportunity to invest in energy efficiency companies? Do you not think, a big part of energy efficiency, though, is really tied to asset replacement? So, replacing your data center assets, replacing your telecoms network. And what people are doing is buying more energy efficient kit. They're not going out saying, I want to buy me some energy efficiency.
Yes, that's right. I mean, that's the issue, that a lot of this is it's bound up with decisions that you're making anyway. And so then it also comes down to this question of data, because you may not know when you're doing a retrofit what is the impact of making a choice on your energy bill at some point into the future. And so I think that there is certainly a piece of the challenge which is around information, around how do people just learn what it is that they're supposed to be doing. And I can tell you that if anybody's involved in retail construction, try and find a UK builder who can tell you what size radiators you will need and what your energy use will be if you do this or that level of insulation. Forget it. They just don't have the skills. So I think skills and data around those kind of normal retrofit problems are clearly part of it. So I think the questions you're coming up with, the kind of what are you doing about it, who's championing it, the cost of capital, but always phrased around, I think what you put your finger on one thing which I do very much agree with, which is the opportunity. Because I think that the last thing you can do is go to people and say, you've got to do this. Because I think people don't like that. What they want to do is to say, well, there's an opportunity, I can improve my business. And people who come with ideas for improving businesses making money generally get a better reception. There is one other thing that you can do, though, which is around disclosure. And I think that that's an important piece of saying, well, okay, so we've done all that stuff around wonderful opportunities, but then there'll still be a big chunk of the market that simply doesn't engage because it just isn't important enough. And I think forcing them to disclose their resource efficiency, it's not just energy, but not just carbon, not just energy, but we've got to move into a world where it is absolutely clear what resources different products and different companies are consuming, because then I think a lot of market pressure will sort of cut in behind you, behind the investor pressure. You'll then get market pressure to say, well, actually, I don't want to use a travel company or I don't want to shop in a mall that's just profligate. I don't want to go to. I mean, having said that, maybe I'm being optimistic because then people still go to pubs that have got patio heaters, and you just think anyway. But disclosure, I think, is a big piece of it. As well.
So could I mean, maybe let's help Craig with his projects. But I mean, the other one we've been doing is competitive positioning. So with the rise in particularly oil prices recently, is actually starting to do competitive positioning in a number of European sort of sectors, and that leads you to some interesting answers. One, where the data gaps are, and actually about consistent reporting and so on. But actually, can you then start looking at sort of patterns in terms of energy intensity, carbon intensity, and other resource intensities, and then go to the fundamental analysts and actually say, are these trends of any value for you actually putting a price on these shares? And in some cases there are. So I think that's another thing you could ask, quite reasonably ask the CEO, is actually where do you sit competitively in terms of your energy efficiency performance, and how much further could you get? I mean, how could you improve your positioning by investing more?
And that's financially material for the firms in the emissions trading scheme.
Well, obviously, yes.
From 2013.
That's right. But also, they're interesting. There are sort of parts of companies which are in, say, steel companies, parts of their businesses are in the ETS, and parts of the business aren't. But there are also energy efficiency opportunities there as well.
Great. Let me take another question on the front row here.
Jean Wayne Thomas from Boots. Another point to help you with your questions. We were talking. You mentioned Michael mentioned the hurdle rates. I think one of the things that you might, I don't know whether it's possible, is to work out how much a company should be investing. So you could have a really good hurdle rate, but you're still not investing because you're not getting the ideas through and you're not actually looking for the investment opportunities. So if you look at a range of companies, how much would you expect that sort of company to be investing every year on energy efficiency? You must be able to get a feel for that. So when you go to ask a company how much is it investing, from the answer, you'll be able to tell whether they're interested or not, as well as having someone on the board, as well as the hurdle rates. Because you could have a really good hurdle rate and someone on the board, and some companies just still aren't doing anything.
So I think that's a really interesting point that we've definitely come across before. So, Greg, if I can kind of repurpose it a little bit, how would you present energy efficiency as a strategic and financially material issue when you meet with finance directors?
Well, I'll try and come to that. We have been talking to companies about resource intensity and energy intensity in particular, and we have, to be honest, we've been getting a lot of kind of pushback. So I've talked to the kind of 3 biggest mining companies in the world about their energy programs, and about trying to kind of benchmark their energy intensity. And they just say it's a non-starter because they're such different companies, and there are so many different reasons why one copper mine is more energy intensive than another copper mine, because the ore grades are worse or better, they're deeper mines, shallower mines, and that makes massive differences. And I mean, I've actually had the same conversation with sort of Tesco and Sainsbury's and Morrisons, and I really kind of buy it. It's all about how much refrigeration you use if you're a supermarket. That's the most energy intensive part of your business, and with leakage, F-gas leakage, that's the most carbon intensive part. And Morrisons uses far more fridges per pound sold than Tesco, because it's still primarily a food business and Tesco isn't. So normalising these intensities becomes an absolute nightmare. Now, I'm not saying it's impossible. I'd love, and I'm very much hoping when I'll give you a call next week to try and see if you've got some good answers, because I think that is a really interesting question. And on the finance one, I think that is also a very interesting question. And CDP has been asking companies to say how much they're investing in energy efficiency for the last few years, and they're not getting very good answers from companies because they say, oh, it's commercially sensitive, we can't release that kind of information. So it might be that they might on a one-to-one shareholder meeting, but the way at the moment I'm kind of looking to go in general is there was a piece of regulation that the Australian government introduced, and the Australian government, as you'll all know, are paragons of virtue when it comes to climate change. But they did do one quite interesting piece of legislation called the Energy Efficiency Opportunities Programme, which required the 200 largest energy users in Australia to report systematically all the energy efficiency opportunities that they could identify with a less than 4-year payback across their businesses. So to make a list of the number of opportunities, the energy value they've identified, and then each year to report their progress in implementing. So how many have they implemented, what's the energy saving that they've achieved, how many are left to implement. And that's delivered something like a sort of 10% energy saving in the first 3 years of the programme, which is consistent with the kind of messages we've got.
So a bit of a kind of stick and carrot approach.
Yeah, so I'm wondering whether the CDP should introduce a kind of voluntary energy efficiency opportunity reporting programme requiring companies who respond to the CDP to at some level of detail, list their opportunities. And that will allow us to see who's actually doing this systematically and who isn't.
Great, thanks. I think we've got time for 2 final questions.
Hi, I'm Tamron Brown from the Grantham Institute at Imperial College. I'd just like to go back a few steps and comment on, or ask a question related to Craig's comment on behavioural change. Often sustainability is dependent on decisions made lower down in the company and much smaller decisions. So it's all very well to have a champion a sustainability champion on the board, but how does one ensure that incentives flow down the company to encourage people to make those smaller decisions on buying new equipment or things like that?
Great question, thank you. Kofi, I mean, maybe you've got the most hands-on experience having led the Oyster card programme.
Yeah, Oyster, Boris Bikes, redevelopment of King's Cross. I spent 10 years in management consultancy, and it's quite interesting when I hear Craig asking about, when he goes to a CEO, what's he going to ask, and so on and so forth, and having a sustainability champion. But there are a number of trends and fads that have emerged over time when people say, oh, we must have a champion for this and we must have a champion for that. And then it gets locked in at sort of board level. And as you quite rightly say, it doesn't really change the behavior of an organization. And I think the key to this is actually, the question isn't having the champion, the question is embedding into everything else you're doing. When you're looking at, say, an upgrade program on your software systems, you do that, you have a turnaround, you have a huge IT staff, they're looking at this over a 5-10 year period. Incorporating that is the question going on about what are our systems costing us in terms of energy usage. It's that kind of way of saying, where are we going to embed this in? As soon as we start bolting it on to things, people feel like, oh God, it's another tick box approach. I've got to have another form I've got to fill out. And, it's not going to go anywhere. It's not part of my core day job, and it's not going to mean anything. I think it's about attaching it and embedding it into everything that we do. I hate the phrase, I'm not an eco-warrior, I'm not talking about climate change. I really do believe, regardless if it's a drop in the ocean of a trader's bonus of £220,000, what it means in terms of across the board and portfolios is billions of pounds. London's looking to attract £40 billion of investment by 2025 in this area, as well as creating hundreds of thousands of jobs. It means a lot. And there is the stick part of this as well, because there's cities are where this is happening. A couple of weeks ago, I was in Sao Paulo with Mayor Bloomberg. Mayor Bloomberg is the chair of the C40 group of cities. It's like the G8, except we have the C40. And the primary concern of these cities is how to be better efficient, how to use energy wisely, how to be smarter in the way we're doing things. And at the moment, we're asking nicely, we're demonstrating with projects and we're saying what's going on. But I'm sure the stick will start to emerge. If you want to talk to the CEO and say, listen, if you don't start doing something, these cities are collating data. There was an Arab report published which is looking to find key indicators of what's happening. And we're going to start drilling down and looking at what business is doing. And it'll be less corporate social responsibility, more about what is going to be the impact if we don't do it in terms of levies and whatever else may happen, because there's a real need.
Yeah. But I think it's interesting, it comes back to the data challenge, and I believe the first CDP report on cities had even worse data than from the corporates. So still a lot of work to do that. So I think we had one final question, and then I realise the panel stands between, you've already asked a question, I'm afraid, so I'll have to go to the back, between you and a cup of coffee.
Hello, my name's Daniel Walker-Nolan. I'm from Carbon Connect. I'd like to go back to Michael's point regarding disclosure. And really, I'd like to know whether the panel thinks that mandatory greenhouse gas emissions reporting would help to encourage energy efficiency, because currently there's a DEFRA consultation out on it, and there's been quite a bit of debate as to whether it would actually help companies to manage this aspect of their output.
Excellent question, thank you.
So I think undoubtedly it would, but the question is, if what you want is energy efficiency, then why did you ask for energy efficiency? Because I have to say that I think you sort of hinted at well, the carbon credit is sort of being reassessed where it fits within. Let's be frank about it. Carbon and climate are not the champion, that they're not the lead horse issues that you could use to drive through change that they were in 2006, 7, 8, and then as we've gone into a financial crisis, they've simply gone off the boil. So I think that there's a broader point there, which is that there was always far too much hope being invested in the whole climate as a lead horse to drive through change, because at the end of the day, survey after survey over the longest period has shown that when you talk about environmental issues, 15% of people think you're fantastic, 70% will say, well, that's fine as long as it doesn't cost me money, and 15% will say that you're trying to impose world government and you're a communist. And the numbers are worse, obviously, in the US. But on the other hand, resource efficiency. I mean, there is not a CEO that Craig couldn't turn up and say, look, I'm just sort of interested, how much is your output? How much output do you get per input? I just think that's a relevant question, and I want to ask it. And you could ask that of any company, and you're not going to, they're not going to have that conversation, and then when you leave the office, say, bloody idiot, asking me about sustainability, wasting my time. You just don't have that discussion. So I think that yes, disclosure on greenhouse gas is fine, but I think that transparency, disclosure, let's turn the discussion into a resource efficiency discussion and include everybody, and say that one piece of it then, for those that are more interested in that, there you go, here's your carbon date. I think that's very important. I actually, if I could, just want to come back to the answer to the previous question around how you push things down into the organisation. We've sort of said that this is really difficult because it's everywhere. Disclosure and metrics are kind of interesting. They're one way of dealing with that problem, right? Because what they say is that rather than try and ask questions about that machine and this and that office and so on, what you're saying is let's get some big picture metrics, because what you measure is what you get. So that's one part of your answer, is around disclosure. And then the other answer is around leadership. You cannot do this stuff without leadership. And I think that what we're looking at here, in some ways, it's all about just, it's about the sorts of, it's every day, what does the CEO spend his time and put his attention on? Is this part of it? Is he consistent? In the same way that you want CEOs that consistently deal respectfully with people, you want CEOs who consistently deal respectfully with resource efficiency issues. And it's just got to permeate, and that is up to the board and it's up to the leadership of the company. So there's no easy answers, but watch your CEO's sort of body language as well as what they say.
Leadership. Great. Well, thank you all very much indeed. Thank you to all of the panel members.